Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. Okay, one of the biggest complaints I get is that I never talk about C Corps. Well, that is intentional. And the main reason is this, because a lot of times what happens is that people go look up a specific question on YouTube and Google. That's how search engines work. You're looking for an answer to a particular question. You watch one video or you read one blog post, and then you suddenly feel like you have the answer to your question, and then you go and get yourself into a whole bunch of trouble. Such is the case with business entities and all of that, and really why I've been focused here for a while. But most of the content that you find, though, is really about the benefits of doing something. It's telling you why you should, but there really aren't a whole bunch of people telling you why you shouldn't, okay? And so that's really where I'm going with this one, because a lot of times I think people get enough information on the benefits of doing something, but not really realizing the pitfalls and the obstacles that can come with this. And forming a C corporation is one of those things, okay? So I will tell you now that you can read all the blogs, you can watch all of my videos, you can watch every darn YouTube video that you can find about business entities. You are still not going to get a correct answer specifically for you. This is why you need to consult with a professional, invest in the consultation, because that little bit of money that you're going to spend upfront is going to save you thousands on the back end. So I implore you to not go and make these business entity changes without consulting with someone, okay? That is a professional. And I don't mean going to the barbershop and the hair salon to get your tax advice, okay? I'm just letting you know. All right. So with that out of the way, I want to focus on the disadvantages of having your LLC taxed as a C Corp. So the first thing that everybody hears about is the double taxation. And what does that mean? That means that with the corporation, the C corporation, that is the only business entity that actually files and pays its own taxes. The S corporation, partnerships, those are information returns. There is no federal tax. Now, can there be state tax liabilities with those entities? Absolutely. But the corporation, the C corporation, is the only business entity that files and pays its own taxes. So the earnings that the corporations has, the profits are taxed. And then if there are any dividend distributions, those are also taxed at the individual level. Okay. So now the dividends are considered ordinary income. So that can be from 10% on the low end to 37% on the high end based on what your final income tax bracket is. Where if you are an owner of the corporation and you are working in the business, then you have to take a salary. And so you're being paid on a W-2 and you've got to pay those Social Security and Medicare taxes as well. So you're going to pay, the taxes at the corporate level for the business and also individually, whether you're getting a dividend or you're receiving a salary. So that's the double taxation piece. Now, the another disadvantage is based on the Tax Cuts and Jobs Act. This is the tax reform that just happened. Corporations are not able to take the qualified business income deduction. That is the up to 20% that pass-through entities can take on their personal income tax return for the qualified business income deduction that's based on your profit and some other stuff. There's a whole bunch of math that goes into that, but it's up to 20%. And there's some other limitations, and y'all, that just ain't something that that kind of math. Yeah, we just ain't doing that today. But also, for the corporations, there is the accumulated earnings tax. And what that is, if you've got a corporation and you're keeping money in the bank, you may actually have to pay taxes on that. Now you really don't have to worry about the accumulated earnings tax until you have about $250,000 in the bank, but still it's a concern because if you're growing your business the way that you're supposed to, you're going to make money. So the accumulated earnings tax is one of those things that's a possibility, even if it's not today, in your future. That's an additional, I think it's about 20% tax for accumulated earnings tax. So there is, a whole nother ball of wax over there. Then the next one is what's called zeroing out. Okay, so basically what that says is you're not leaving any money in the corporation. You're either paying it all out in salaries or dividends, which means you may not pay any taxes at the corporate level, but you're going to pay it at the individual level. So that's something that people try to do as well. It just depends on, what your goals are. This is why I say you don't go do this stuff all willy-nilly, because there's too many moving pieces. Now, this one, the next one I'm going to talk about, people it's just a lack of knowledge, really. And that is dealing with corporate losses. So when you have a loss with a pass-through entity, that's your sole proprietor, your single member LLC, your partnerships, multi-member LLC, and your S Corps. Those that pass through, the profits and losses are passed through to your personal income tax. Okay, so if there's a loss, it's netted against other income, for your personals. That's if you've got a W-2 job, you've got a spouse that's working, it's netted against other income. Where with the corporation, your corporation maintains those losses. And you hear about a net operating loss. And really, net operating losses are really huge, because people are, what hit the news earlier this year is how Amazon isn't paying any taxes on $11 billion. Well, or 11 million, however much. It was a bunch of commas and zeros at the end, okay? But it's because they have a net operating loss that they're carrying forward that was wiping out their profits. Okay. And so that's what happens with the corporation. When you have a loss, that gets carried forward. And with the current tax law, it offsets up to 80% of your profit. So you can still, the net operating loss, I don't know why I can't say that today. The NOL, how about that? That's what it is. So the NOL gets carried forward and offsets other profits in the future. It's not something that gets passed through to your personal return. All right. Now, the next one is really not understanding the getting out process. Right? This is why, again, I tell you don't take these things lightly, because getting into being taxed as a C corporation is really easy. You just file a form and boom, there you go. But if you figure out after the fact that the C corporation is not for you, is not what it's all cracked up to be, then the getting out part can be really difficult, especially if you have acquired assets, if you grown the business. It's not going to be without a tax consequence that you revert back to being an LLC. You can be, or a multi-member LLC or a single member LLC. So it's not going to be one of those things where you just file the form and we just go back to being what we were. No, there can be other tax consequences that are involved in that getting out process. This is why you make sure going in that this is the right thing and the right time for you to do that. Okay. And then the record keeping requirements. And again, having a single member LLC is about the least administrative intensive form that you can have. It's not a whole bunch of paperwork that you really got to track. But once you jump off into that C Corp abyss, well, then that's something a little bit different, because you have to abide by the rules of that business entity. So that means you've got to file the financial reports. You've got to have financial disclosures. You've got to have, financial statements. You've got to have minutes of the annual shareholders meetings, directors meetings. You've got a lot of administratively intense things that you have to do. So it's not that you just, I'm going to go file this form and be a C Corp and I'm going to just keep operating as I am. No. That is not how this works. When you elect to be treated as an S Corp or a C Corp, you have to follow the rules of that business entity. So going in, you got to make sure you know the rules of that business entity. And one of the things that you never, people don't talk about is what is the getting out process. All right. Because when you know the getting out process, that might make you pump your brakes a little bit before you go jumping in. And then, later on, as your business grows, it may require you to file with the SEC, which is more government oversight. And at that point, this is when you wind up on the stock exchange and all that stuff, and people, a lot of times people look at this and say, okay, that'll never be me. I won't be making that much money. And then I simply ask, then why are you doing this? Why do you, if you're going to be jumping off and saying, I'm going to be a C Corp, then why are you doing it? If you don't expect yourself to, to make $250,000, $500,000, why do it? Right? So yeah, these are the things that, that people don't talk about. Right. On the flip side, everybody's talking about, if you got a C Corp, you're completely separate from the business. Absolutely. There's so much you can do with a C corporation, and you can have shareholders and investors and all that stuff. Absolutely. All those things are true, but that's not necessarily the reason that you become a C Corp, because you just may not be ready. And if you don't have your bookkeeping and accounting in order, if you don't have a team to help you administer this C Corp, this may not be the right thing for you until you get those things in place. It's not just about tax savings. It is a whole big picture of where you plan to go with the business. If you are planning to take on investors, just a bunch of moving parts. And a lot of times people just get stuck on the tax part and separating the business from themselves. Like you can do that with the LLC if you're just looking for liability. But at the end of it all, I don't care if you have a C Corp, S Corp, partnership, whatever you got, if you are commingling funds, okay? That means if you are siphoning money out of your business to pay for your personal things, and I'm not talking about whether you're paying yourself a salary and then you go pay for personal things. I'm talking about you writing checks out of your business to pay for your personal living expenses and stuff like that. You lose whatever liability protection that you had, because that means that you and the business, there's no separation. So the first thing that I ask people when they talk to me about, about business entities, I'm asking very simple questions. What's your what bookkeeping software are you using? And the moment somebody says that they're using a spreadsheet, I'm saying, okay, no, you're not ready. And people get mad. But you know what? I'd rather you get mad before you do something than pay the price for doing something first without talking to someone. Okay, that's the end of it. So, when it comes down to business entities and everything and tax savings and all that, there's a lot of stuff that you can find on the internet. I started this broadcast by saying that you can find lots of information, but that doesn't mean it is the right information for you. Only when someone sits down and looks at your whole picture, and it's not just your business. It's also, if you've got a working spouse, the tax credits, all of that stuff matters. It's a very big picture thing to help you make the right decision for you. So yeah, don't, and this is why I have been very slow to talk about C Corps, because I just really don't want somebody's blood on my hands. That's it. So there you go. All right. So thank you guys so much for tuning in to Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come right here to get your questions answered about your home business taxes. All right. Have a great day, and I'll see you all next time. Bye.